Hi, today's Friday, October 14th, 2020. I'm Jason Shapiro with crowdedmarketreport.com. So usually in these videos, I don't really like to talk about what the market is necessarily doing specifically right now. I like to talk about more broader themes about trading and risk management and that type of thing. And I think the main reason I don't like to talk about the markets that much is I'm wrong so often that I would hate for people to take my word and lose money off of it. I can deal with it, and I can deal with my risk through being wrong. I wouldn't want other people to do that. But we're in a situation here where I think it's something that needs to be discussed. I have traded through bear markets before. I've traded through some panics before, the Asian crisis in '97, the whole internet thing, bubble and bubble pop, and the 2008, financial crisis. And just to talk a little bit about those, and the Asian crisis happened because the trigger was that the Thai baht really, I think, was pegged to the US dollar, and yet Thai baht offered interest rates way above US dollars, so people could sort of borrow US dollars at X percent, switch them into Thai baht, and get the interest rate for the Thai baht at a higher level, and then switch back to the US dollars and make a free arbitrage profit. So that was there. So people did it so much that on such a leveraged basis, they ended up breaking the system, and the Thai baht got devalued, and the whole thing cracked, and everybody sold everything, and there was panic across all of Asia. And when it bottomed, I can specifically remember, because I traded Hong Kong very actively then, at the bottom, the Central Bank of Hong Kong came in and decided to buy basically every stock in the Hang Seng Index. They sat on the bid and said, sell us whatever you want. And people gladly did. They sold them everything. And this was seen at the time as a horrible thing, because it was like, the central bank shouldn't be getting involved in markets. Hong Kong's a free marketplace, and this is the end of free markets, and this is the end of Hong Kong, and this is horrible. Sell everything. And that ended up being the bottom, and the market went straight up, and the Central Bank of Hong Kong made a huge profit and ended up distributing it to the people of Hong Kong. Great trade. But that was how the bottom looked. The central banks intervening and everybody hating it. In '08, it was a similar situation. We had this whole leverage situation with the real estate and everything, and it cracked. And once it cracked, it all came shitting down. And we essentially, arguably, almost ended the entire financial system. We lost some banks. We were probably going to lose all the banks until, again, the central banks and the Treasury Department got together, and they bought all these bad loans off the bank's books, and they printed a bunch of money to save the system. And again, it was seen as the same thing. I worked as a hedge fund then, and we used to have portfolio manager meetings every week, and I can specifically remember everybody saying how this was the worst thing in the world. The free market was over. It was the same thing I had heard in Hong Kong 10 or 11 years earlier. And again, that ended up being the bottom. And the central bank sort of saved the day there. And now we fast forward to today. Okay, where the market's going down, both stocks and bonds, and people are looking for the bottom to be when the central banks get involved by either stop raising rates is the big one, right? When are they going to stop? And on an outside case, when will they intervene? Which is ironic, because before they hated it when they did it. Now it's all they want them to do to save it, which changes the game. When everybody hates when they do it, there's a good chance it works, right? When everybody is counting on them doing it, I feel like it changes the odds. There's a good chance it doesn't work, right? Not to mention the fact that they're in no position to do that right now anyway. First of all, they have told us many times that they are not even close to not raising rates anymore. And they're not in a position. What are they going to do? Start going out and printing money to save the system here? You got to be kidding me. That's a very, very last resort. And a last resort means the market's going to be a lot lower before they do it. So this is, to me, a very dangerous situation here. And on top of that, I have to say, In 2000, the market came down a lot. People panicked and kind of got out. It came right back. They wished they hadn't sold. They wished they had bought more. In 2008, we had a very scary situation. People panicked. They got out. And we saw it. The household weightings towards equities by the bottom of the market in 2009 was at historical lows. Turned out they shouldn't have sold. They should have bought because it came right back, and we've been in a bull market since then. And then you had the COVID situation where the markets came down for a very short period of time, and people had learned the lesson. Let's buy. They bought, and they've made a bunch of money doing that, or at least they did make a bunch of money doing that. And so now they've learned that lesson. You don't sell down markets, you buy them. And again, I'll go back to the same thing. When you're selling down markets, when everybody is selling down markets, that's why they rebound. This time, no one's selling it. We're not seeing it anywhere. We're seeing, like Merrill Lynch told us, that last week, not this past week, but the week before, was the fourth largest amount of inflows into the equity market since 2008. So people are consistently buying this dip, and you hear it everywhere, right? You talk to these people that are sitting in 60-40 portfolios. They're not going to sell. No, this isn't the time to sell. This is the time to buy. They're trading the last war, so to speak. They're fighting the last war. And I think it's, again, I think it's extremely dangerous, and we're seeing nothing. If you look at here, this is positioning. This is the Dow Jones, okay? Well, this is where commercials are super long and specs are super short. That was in May, June, right? This is where we are now. We're not even close to that. People for the last 3 weeks, this is the speculators have been buying the market, right? Let's look at the NASDAQ. Speculators are long here. They've been buying it, right? Let's look at the S&P. Oh, there it is. Look, I mean, this is when they were super short back in June, when we had that rally. They've been doing nothing but buy. This is commercials. Commercials have been selling it for the last 5 weeks, while speculators have been buying it. We're on new lows. This is, to me, an extremely scary situation, right? For all those reasons that I just mentioned. And if you think about it, we had some central bank intervention in the last few months. We had a yen intervention in the middle of last month, which was here, and it lasted all of 2 weeks, because we're now at new lows on the yen, right? So that intervention just didn't work. We've had an intervention of sorts in the gilt market the last week or two. Well, this is the interest rates on gilts. They've barely come off of highs here. And the central bank told us this was a huge issue with pension funds and all that stuff. And whatever they've done hasn't even worked, right? So again, if everybody's counting on central bank intervention to stop this from happening, and therefore they keep buying, it's a reflexive process, right? If they're buying it, it ain't going to work. If they were selling it, it would work. Everybody's sort of waiting for this capitulation to happen. And not only are we not getting capitulation, we're getting the opposite of capitulation. People are buying. It's extremely dangerous. Let's not forget, there's a phrase, don't fight the Fed. This is the biggest Fed fight that I've ever seen, right? And we're in a situation where we're coming off the biggest Ponzi scheme ever, right? These central banks printed massive amounts of money for 14 years. And all of a sudden, 2 months into them stopping this, everybody thinks it's going to end. This is the hugest unwind ever, okay? So does this mean the market's crashing Monday? Does this mean the market goes down next week? Does this mean it can't have a rebound into the year end? It doesn't mean any of that, okay? But it means you gotta be extremely careful here. We are in a very, very dangerous situation here. This is not the time to be fooling around with your money, I think, if you value your money. This is not the time to be trying to step in front of this here, right? And like I say, the last time I made a comment on the market, it was back in, June, July or something like that. On the S&P, where I kind of caught this rebound, and I think it was about here that I did the video and said, this is not the time to be shorting. Well, within a week, it was the time to be shorting. Okay, so I clearly can be wrong, just like anybody else, but I just feel like right now is not the time to be fooling around. And let's talk about what happened yesterday, because if you've watched some of my videos before, and people that sort of are familiar with how I approach the market, I like to see a market sort of have a news failure event. So like yesterday, we had a CPI, and this would have been a perfect news failure event because CPI has been the fuel to the bear's fire, right? And we had a much higher CPI than people were expecting, which should have been hugely bearish. I think JP Morgan or somebody was calling for a 5% down move if that happened. And the market went down for about a minute and had a humongous up day. There's a news failure. The problem is, as I just was looking at the COT charts and as I talk about people inflowing into the market rather than outflowing, you didn't have a positioning thing first. So that ends up just being a bull trap on those kind of news failure days, right? So all it was a squeeze. And what it did was, in my view, it got people even less short than they were. The market's basically where it was on the Wednesday close. So Thursday it squeezed up, and then Friday it came down. We're right where we were on Wednesday close, and Nasdaq is actually below it. And what you have is less shorts than you had on Wednesday. So all of these things, to me, are extremely bearish. The fundamentals, the technicals, the positioning, the general psychology, it's horrible. There's a long way to go here. Again, I don't know what happens next week. I don't even know what happens next month. But I would be willing to bet just about anything. This is not the low, the ultimate low of the market. I think the ultimate low of the market is way off from here, both in time and in price. This is not going to settle itself in 7-8 months, okay? This is going to take a few years to settle itself, which of course means there have to be bounces along the way, because if it goes down at this rate for, a few years, then it's going to be zero and there will be nothing left to worry about. But so there will be bounces, and maybe those are tradable bounces and all that, but I just think it's time to be very, very careful with your money here. Okay, so that's it. Any questions or comments, as always, happy to hear, and have a good week. Thanks.